Oil prices crash, US GDP on the way, as well as data from New Zealand and Japan. Let's find out more in the week ahead with Bob Mason from FX Empire. Well, Bob, thank you so much for joining us. It's always a pleasure to speak to you. It's been quite an eventful week with an oil crash, and we're set to see the US GDP data released next week as well. But apart from this GDP data, what else should market participants be looking out for?
On the economic calendar, looking past the GDP numbers, at the end of the day, everyone's pretty much written off the first quarter. We need to get past April numbers. So you're looking at German unemployment figures, you're looking at the weekly jobless claims figures out of the US. Those are two key ones. We need to draw a line under the sand, as it were. We need to see US initial jobless claims start falling back to sort of sub-million levels to support, the view that the worst has happened and there's not going to be another material shift. If the US continues to remain in lockdown mode, however, and the slowdown in the economy continues to pick up in pace, other jobs are going to be lost. The ones that are a little bit stickier than, people working in cafes and so on. So that's one big concern. And, those are higher earners that have a much more impact on consumption. And obviously the same for Germany. We saw the GfK climate figures last week, and that was particularly dire reading. So there was still hope that there'll be a turnaround in the economy. So once that hope dissipates as well, then that's another negative. So line in the sand in April is really key. So looking at employment numbers, looking past first quarter, and beginning to look forward to sort of May numbers is what we really need to be doing on the data front. Monetary policy, you've got the ECB and the Fed in action, and the BOJ. For the Fed and the ECB, well, the Fed's delivered a lot. You're at zero rate, so what have they got left in the tank? Forward guidance is going to be particularly key. Same for the ECB. There's a lot going on in the EU at the moment. There's question marks over the EU project, largely because of the fact that member states can't come to an agreement on delivering an aid package that will actually, offset the effects of the coronavirus impact on the economy. So those are two big things to look out for. If the ECB continues to bumble along and, members of the ECB committee decide to continue to drag their feet, then that's another, red flag, as it were, for the EU project and the euro as well. So look out for those. And what the Fed looks to see in terms of policy and economic growth outlook in response to the IMF numbers, and the forecast that we saw a week ago.
So lots of data from the US and EU then, and the central bank's set to make a fair few announcements, Bob. However, all should be pretty calm in the UK. Let's move on over and talk about the commodity currencies. What should we expect from them?
On the commodity front, commodity currencies, they're still under the hammer. We've talked about this last week as well. There's a lot of economic uncertainty lingering around. Obviously oil prices hit negative territory, and demand for commodities is expected to be weak near term. So, we're looking at China, April private sector PMI numbers next week. How are those looking? Are we going to see private sector activity contract again, or are we going to see continued growth following the rebound in March? A contraction again will raise questions over those expecting a rebound and a V-shaped recovery in economic growth, across the West. So commodity currencies still under pressure. And don't forget, we're still considering the possibility of further rate cuts. Should the lockdowns linger, borders are not going to be opening anytime soon, and demand is going to remain weak until employment levels recover to those that we saw prior to the lockdown measures that were taken by the respective governments. So pressure remains. We might see some support. That's from fiscal policy from the US and the West, and obviously you got monetary policy as well. Let's see what the Fed and the ECB have to offer.
So traders could see surprise moves in New Zealand dollar pairs due to better than expected New Zealand dollar data. Last week was calm in Japan and China as well. What do you expect to see in this upcoming week?
For the Japanese yen, we got the BOJ in action. Are they going to deliver? Obviously the Japanese government delivered, stimulus that's meant to, support growth, but they're still in a state of emergency, and they're seeing coronavirus cases rise, which is a concern. The BOJ is going to have to step up. What have they got left to deliver? It remains to be seen. Obviously, there's bond buying programs, some sort of support in terms of credit environment for consumers and businesses. And will they drop rates even further into the red? It remains to be seen, but expect some action. From China and the Chinese yuan, you got, as I said, you got the April private sector PMI numbers forecasted for those to contract again in the private sector after rebounding in March. So that will be a concern. Obviously, across the West, it was locked down during April, so demand was going to be particularly dire. Particularly when you look at obviously PMI numbers out of the EU, the UK, and the US. So they're unlikely to be particularly impressive. That means more support from Beijing and the PBOC, and we're expecting that. We're not expecting that to be the end from a Beijing and PBOC perspective. So expect more, and that should provide some support for risky assets. But we're not out of the woods yet. Obviously demand remains a key concern, and that's not going to rebound just from monetary and fiscal policy support. When you factor the lockdown measures.
So a lot of stuff to come from the Bank of Japan. That'll be at the top of the news agenda. We went through the scheduled events. In the meantime, the current environment remains geopolitically dominated. What should traders and investors be watching out for?
Well, just when you thought that the coronavirus was all that you need to be looking out for, obviously there's now plenty more to consider. We've got the failings of EU member states to come up with a decisive aid package to counter the effects of the coronavirus on the EU economy. Obviously we saw the euro pull back overnight on Thursday. EU member states are just not finding common ground, and the likes of Italy, Spain, even France are aligned in terms of the need for a more united front. So that brings into question the EU project. You got Trump and Biden starting to eat into Trump's sort of support. Well, what does that mean? Trump's going to have to pull out all the stops. And that could mean some sort of conflict. We're seeing tensions rise in the Middle East. Obviously we heard about the call for US warships to attack any Iranian ships that go within range. So that's one issue you need to concern. And Trump's got a vested interest to weigh on supply from the Middle East just to prop up oil prices for US shale producers. So a conflict that would be a great distraction, as Biden starts eating his way into Trump's lead. So those are two big things. EU project, obviously Middle East, Iran and the US, and obviously you've got oil prices and so on. So those are the two big things I'd be looking at.
Well, Bob, plenty of interesting stuff there. We'll keep our eyes on that, and we look forward to speaking to you again soon. Thank you very much. And thank you for watching. This was The Week Ahead. We'll see you again next week. Until then, goodbye.